Silver just moved above $110, and most people watching this market still think this is just another price spike, another headline that will fade. But what if I told you the real story isn't the price at all? What if the most important thing happening in silver right now is something almost nobody is talking about? Something that quietly decides whether this move stops here or turns into something much bigger than anyone expects. Because when silver pushes through levels like this, history shows it's never about hype. It's about supply. And right now, supply is hitting a wall. Before we go any further, if you want clear, calm breakdowns of what's actually happening in gold, silver, and the real economy, without the noise, take 1 second to like this video and subscribe to the channel. It helps this video reach more people, and it tells YouTube you want more honest market analysis like this here on Silver Reset. Now let's slow this down for a moment, because when silver trades above $110, most investors immediately ask the wrong question. They ask, is this too late to buy? Is this the top? Is this a bubble? But the better question is, why did silver get here in the first place? And what has to happen for it to stay here? Silver doesn't behave like tech stocks or crypto. It doesn't move just because people feel excited. Silver moves when physical demand runs into physical limits, and those limits are much tighter than most people realize. For years, the silver market survived on the idea that there would always be enough metal somewhere, enough inventory in warehouses, enough scrap coming back into the system, enough new mining supply to balance things out. That belief kept prices suppressed for a long time. But what's happening now is that those buffers are disappearing. Industrial demand didn't slow down the way many expected. Solar, electronics, medical uses, and defense applications continue to absorb massive amounts of silver every single year. And unlike paper markets, industrial users don't care about price charts. They care about delivery. At the same time, mining supply is not responding the way people assume it should. Silver isn't like oil, where you flip a switch and production increases. Most silver is produced as a byproduct of other metals, which means even if silver prices rise, miners can't instantly flood the market with new supply. New projects take years, sometimes a decade, to come online. And many high-grade silver deposits that once carried the market no longer exist at the scale they used to. This creates a situation where demand keeps pressing forward, while supply hits a ceiling that doesn't move easily. This is the supply data wall nobody is talking about. It's not dramatic. It doesn't scream in headlines, but it's relentless. Every ounce used in industry is an ounce that doesn't come back quickly. Every delay in mining investment today becomes a shortage problem tomorrow. And when prices rise into triple digits, the system doesn't suddenly loosen. In many ways, it tightens. What makes this moment especially interesting is that silver is doing this while much of the financial world is still distracted. Stocks grab attention. Short-term economic data grabs attention. Political headlines grab attention. Silver quietly moves higher in the background, largely ignored by the mainstream, even as physical premiums stay elevated and delivery times remain stretched. That disconnect matters. It tells you this move isn't driven by retail frenzy. It's driven by necessity. If you've followed this channel for any amount of time, you know we don't focus on day-to-day price noise. On Silver Reset, we look at pressure points, at systems under strain, and at moments where markets are forced to reprice reality. Silver above $110 is one of those moments. Not because it sounds impressive, but because it exposes how fragile the supply side really is. Another layer most people miss is inventory quality. Not all silver is equal. Much of what sits in reported inventories isn't freely available. Some is already spoken for. Some is tied up in long-term contracts. Some can't be moved without disrupting other markets. When prices rise fast, what matters isn't total inventory on paper, but deliverable inventory right now. That's where the stress shows up first. And this stress changes behavior. Industrial buyers start locking in supply earlier than usual. They pay premiums to guarantee delivery. They adjust designs to minimize silver use, but only to a point. Investors watching from the sidelines suddenly realize silver isn't just an inflation hedge, it's a strategic material. That's when demand stops being elastic. People buy not because it's cheap, but because they're afraid it won't be available. This is also why volatility increases at these levels. Silver doesn't glide smoothly higher. It surges, pulls back, and then tightens again. That pattern shakes out weak hands and exhausts people who don't understand the bigger picture. But structurally, nothing improves unless supply improves, and supply is not improving fast enough to matter in the near term. We also need to talk about psychology. When silver stayed below $50 for years, it was easy to dismiss it. When it moves above 100, the conversation changes. People start revisiting assumptions they haven't questioned in decades. They start asking whether paper pricing mechanisms still work the way they used to. Whether futures markets can control price discovery when physical demand keeps draining real metal. These questions don't have instant answers, but the fact that they're being asked at all is significant. This is where many investors make mistakes. They look for certainty. They want a clean signal that says buy or sell. But markets like silver don't give comfort signals. They give pressure signals. And pressure is exactly what we're seeing now. Pressure from industry, pressure from limited mine supply, pressure from investors slowly waking up, and pressure from a global system that relies on silver far more than it admits. As we move forward, pay attention not just to price, but to behavior. Watch how quickly dips are bought. Watch how premiums respond, not headlines. Watch how miners talk about production timelines and costs. Watch whether supply projections quietly get revised lower. These are the clues that tell you whether this level is sustainable or just a stop along the way. If you're finding this breakdown helpful, let me know by hitting the like button. It really does help push this message to people who need a clearer picture of what's happening beneath the surface. Silver above $110 is not the end of the story. It's a checkpoint, a moment where the market briefly reveals how tight things really are before moving on. Whether prices consolidate here or move higher later, the supply wall doesn't disappear. It only becomes more visible over time. And this is why discussions about silver can't be reduced to short-term targets or flashy predictions. The real power of this market lies in its constraints, in what cannot be produced faster, in what cannot be replaced easily, in what modern technology quietly depends on every single day. As we get closer to the end of this video, I want to hear from you. Do you think the silver market has already adjusted to these supply realities, or do you believe most investors are still underestimating how tight things really are? Drop your thoughts in the comments below because those conversations help everyone see this market more clearly. If you found value here, consider sharing this video with someone who still thinks silver is just another commodity. Sometimes all it takes is one clear explanation to change how someone sees the entire market. Thanks for watching. This is Silver Reset, and we'll keep breaking down what the price doesn't always tell you, but the data always does.